Good afternoon, everyone. This is Richard Jobity, business analyst with the NGC. We are actually running the first of our webinars this year. This is a very similar presentation to the one webinar I did last year. So here we go. Essentially, what I am about to speak on is the structure, history, and role of the natural gas industry. I am your facilitator, Richard Jobity. What am I going to speak about today? I'm basically going to speak about three things. Number one, I'm just going to give you a general overview with an examination of natural gas in a global context. Then secondly, I'm going to speak a little bit about the history, overview, and importance of the natural gas industry to Trinidad and Tobago. And then finally, I'm going to speak a little bit about the natural gas value chain. Now, keep in mind that this presentation will be available after the webinar. You can check the NGC lecture series Facebook page, or you can check the NGC website and they will have a complete recording of the webinar. So if you are taking notes and you miss something, you can always get it there after. Right. So essentially, there's just a couple of things that I would like you to take away from this webinar is this. Just these four main points. One, Trinidad and Tobago, we are heavily dependent on hydrocarbons, which is basically oil, natural gas, and natural gas-based industries. That has been so since the 50s. And remains the case today. Even though we are pretty small in terms of the absolute number of reserves that we have, we've actually managed to do a lot with this, and that's been due to deliberate policy decisions. Given that we've made a lot of these deliberate policy decisions with respect to the natural gas, we've actually managed to create a lot of value. And that value is reflected in things like living standards and whatnot. But what we need to be sustainable in the future may not necessarily be the same thing that made us successful at this. So that's the four main takeaways I'd like you to take. So let's go. I'm just going to give you a little overview of natural gas. What is it? Natural gas is a gas. It's not a solid, it's not a liquid, it's not plasma, it's colorless, it's shapeless, it's odorless. Usually, if you smell natural gas, it's because we put an odorant into the gas so that the gas can have a smell. For fossil fuel, it's pretty much clean burning. It doesn't emit a lot of harmful byproducts like particulate or whatever. Generally, it's a combustible mixture of hydrocarbon gases. It's usually things like methane, ethane, and other gases, but I'll get to that in a little bit. And essentially, it's a fossil fuel. It's like oil, it's like coal. As we know, fossil fuels are just basically the remains of plants and animals and other microorganisms that lived millions and millions of years ago, and the remains were compressed so that eventually became fossil fuels. So let's go. If you look at your typical composition of natural gas, it's generally mainly made up of methane, which is pretty much what they use for downstream petrochemicals as the main raw material, either as a fuel to burn or in the furnaces, or as a feedstock to create other products. And if you look at your other byproducts, you've got ethane, you've got propane, you've got butane, you've got carbon dioxide, oxygen, nitrogen, hydrogen sulfide. You occasionally get your rare gases like your heliums and your xenons and your argon, but those generally exist only in trace quantities. Essentially now, if you're looking at, for example, in practical terms, the slide I put up is generally pretty much stating that in different gas provinces, you tend to have a different breakdown of each components. For example, if you're in Trinidad and Tobago, depending on where you source your gas, you can have a methane component of either just about 89 to 90%, all the way up to just about 99%. And just to compare, we've actually put in two other gas provinces. We put in Qatar, we put in Brunei, and as you can see, the breakdown of the components are all different, but it's generally all natural gas. In terms of the type of recoverable gas there is, we generally use two main methods. We generally have conventional associated gas, that is natural gas refined with oil, or you generally have conventional non-associated gas, which is pretty much gas that you find by itself. In other provinces, you've got coal-bed methane, gas source with coal-bed methane, you've got gas source with tight sands, and you've got gas source with shale, and we'll touch a little bit on shale later. In terms of just a general definition for shale, shale is generally natural gas that's trapped within a shale formations, and as we know, shales are fine-grained sedimentary rocks that are pretty much rich sources of petroleum and natural gas. Your geologists and your budding geologists would really know this. And it's important because over the past 10 years, we've actually managed to figure out how to extract natural gas shale. So as a result, in certain countries, a lot of natural gas production has increased based on output from shale. And again, we will get to that in a little bit. In terms of hydraulic fracking, this is the main method by which shale gas is extracted. It's pretty useful to know, but it's not critical to know, at least not yet in Trinidad and Tobago. This can actually be looked up on a site like Wikipedia or any natural gas site, so I'm not generally going to go into detail on this. Where is shale gas? Shale gas is generally found pretty much where you would expect to find natural gas. There are huge concentrations of shale in, for example, the former Soviet Union. There is some concentration of shale in North Africa. There is some in South Africa, some in Australia, some in China, a few deposits in South America, mostly Argentina and Brazil. And there are deposits of shale also within Mexico, United States, and Canada. What they don't tell you is that shale actually requires a lot of water to be useful. So as of now, the only country that's really extracting a lot of natural gas via shale is actually the US. And in terms of our global context, right now we're just about, in terms of resource production, we're less than 1%. We just are like about 0.2% of the global total. And in terms of our reserves, just about 0.4 trillion cubic meters. That figure is, the actual figure is probably a bit lower because the new cash reserves numbers came out just last week, sometime after this presentation was completed, and I think we're down by about 7-8% from that amount. In terms of years, reserves of production in terms of years, it's probably just like about 12, somewhere just about 12 years. There's been some adjustment in the numbers, and I'll get to that in a bit. In terms of our reserves to production ratio, the biggest reserves are actually in the Middle East, pretty much in Qatar, and the least amount of reserves are in North America. In terms of our history, what's been happening is that as gas use has increased over time, so have reserves also declined over time. With the new shale reserves being used in North America, some of that decline has been to some extent reversed. And again, we'll get that. In terms of our distribution of gas reserves, the distribution of gas reserves generally remains about the same over time. What's actually happened over time is that the quantum of reserves have increased. So from 1993, you went from just over 184 trillion cubic meters just to last year, where the estimate is something like 185.7 cubic meters. And again, your source is your Statistical Review of World Energy 2014. Very useful resource to have. It's available on the BP site. In terms of the US, what's been happening is that over time, our shale gas production has been increasing very significantly from 2005, and we're pretty much getting a geometric increase in shale gas that's projected up to 2040, with non-associated gas generally declining, with the methane remaining fairly stable, gas associated remaining fairly stable. In terms of overall production, North American production is also slated to increase over time, and probably by about 2015-2016, they will be in a net position, which means that they can actually export natural gas, which also has implications for us as well, that I'll get into in a bit. In terms of our production and consumption, since natural gas in fact cannot be stored, unlike oil, generally what you find is that production pretty much equals consumption. And in terms of Trinidad and Tobago, we are responsible for just under 0.7% of global consumption, and that's because we've got a lot of world-scale plants that use a lot of natural gas. For our side, in terms of world consumption, we're just over 3.3 billion cubic meters, which Trinidad and Tobago is utilizing from like 3,314.4 billion cubic meters, which Trinidad and Tobago is using from like 21.7 BCM. And again, it's because we've got a lot of plants creating a lot of products based on natural gas, so we're using a lot of the gas. In terms of consumption per capita, we're pretty much one of the higher uses of consumption per capita by virtue of the fact that, again, we've got a lot of full-scale plants and a fairly small population compared to other countries. The other big users of gas are, in fact, the other big producers of natural gas, that is the US, Canada, Russia, and Saudi Arabia, and 1 or 2 other countries in the Middle East, to a lesser extent Argentina, Australia, Indonesia, Brunei. The big gas producers, the big gas exporters. In terms of our major trade movements, actually what's pretty clear now is that right now our major trade movement of gas directly exported as LNG is actually to South America. That's something like 3.6 BCM. And in terms of our gas exports to Europe, it's 2.2. That's mostly going into Europe to be used for electricity. And we still got 2 BCM going to the US, again, as LNG. We don't export any pipeline gas at all. In terms of our gas generation, we do generate a lot of energy from gas. Pretty much number 7 worldwide in terms of our least standard value, kilowatt hours of electricity generated per gas per person per year. As of the last time the survey was done, we were probably at number 7. Again, because we produce all of our gas or electricity via gas, we've got a fairly small population, and for our size, we do use quite a bit of electricity. And again, if you look at this, you can see that most of the countries at the top, with the probable exception of Singapore, are in fact big gas users, big gas producers, big gas exporters. In terms of, finally, just to put our resources in context, at the end of 2013, we were using something like 12.4 TCF of gas, just about 0.2% of gas reserves, 1.2% of gas production, 5.7% of energy trade. We do export a lot of energy for our sides. In terms of gas prices, the important thing to note here is that because of shale, the US has a relative abundance of natural gas compared to other regions, so prices, everything else being equal, prices tend to be correspondingly lower in that area. So probably from about 2008, 2009, you find Henry Hub prices generally trending a lot lower than prices in other countries. For example, prices going into Europe are a bit higher. That's usually gas exported commercial by pipeline. And if you look at Japanese LNG imports, Japan has no natural gas of its own, so it imports all its gas by LNG, so prices tend to be correspondingly much higher. Again, the presentation will be made available after the webinar and should be available by more afternoon as the chat says. Okay, finally, that's just an attempt to put Trinidad and Tobago in global context. So I'm just going to go a little bit into the history overview and the importance of natural gas to Trinidad and Tobago. Essentially, what you must know is that we've been in the oil and gas business for a very long time. We've pretty much been in the oil and gas business since 1865, which is just about the time that the drillers in Pennsylvania in the U.S. were starting the oil industry in the U.S. So we've been at it pretty much at the same time as the Americans. We've been pretty much drilling oil since 1902. We've pretty much been producing oil since about 1908. We've pretty much been producing gas since about the same time. We've pretty much been using gas commercially since the mid-50s, and today we use a lot more gas. I'm just going to go through the next slide. A couple of slides are next 3 or 4 slides are very quickly just the historical highlights of what we did when we did it back when. It's going to be made available. I'm not going to spend a lot of time on this. It's generally just delineating the history of the sector. And yes, it is important, but my time is in fact quite limited. So you can always catch up with it when you get a presentation tomorrow. Now, in terms of how the economy of Trinidad breaks down, it's always traditionally been what we call a dual sector economy, which means we've got one enclave sector that produces a commodity mostly for export that generates most of the economic value in the economy, and you've got another sector, the inland sector, where most of the people live, operate, and work that does not produce a lot of value relative to the enclave sector. And for Trinidad and Tobago, it's pretty much always been that way since long before independence. Traditionally it's been either an agricultural product like tobacco, whether it be tobacco, whether it be cotton, whether it be sugarcane, whether it be cocoa. From about the 1950s or so, it became petroleum. From about the 1980s into the 90s, it became petrochemicals, and from 1999 to 2000, somewhere around there, it became LNG. What is it going to be in the future? We don't exactly know, but something else will come along. In terms of how this works, generally what happens is that it's always been so. Whether it's been bananas, as it was in 6 years prior to World War I of the last century, or whether it's been petroleum and petroleum products, whether that was from 1962 to 1972, or whether it's been oil and gas products as it is today. We've always had a huge export commodity concentration of well over 50 to 70%, and these days it's even more than that. And you generally have a second product contributing much less to export value. Right, looking at our economic overview, essentially the state acts as the intermediary between the offshore sector, which is your enclave sector, and your onshore sector, which is your everything else sector. For us, the offshore sector is pretty much exploration and production of oil and gas, the production of petrochemicals to natural gas, the sale of LNG, and services related to that. With our offshore sector, foreign exchange is earned and export of goods are made. Essentially, the offshore sector provides the government revenue through taxes, dividends, and other payments, and based on the revenue that it accumulates from the sector, which is the majority of the revenue that it gets in total, that government will then spend that money in terms of social services, in terms of providing infrastructure, all sorts of stuff. And through that, it helps to generate activity in the onshore sector, which would be things like financing, manufacturing, construction services, non-tradable. You know. For us, the offshore sector is in fact one of our main sources of foreign exchange, which is then spent in the offshore sector to get all those goods that we need. Essentially, in terms of the petroleum sector, for us, the petroleum gas sector, most of the investments will in fact take place in our sector. In terms of foreign investment, it's usually like somewhere like 90 to 95% of foreign investment. So if you hear that Trinidad and Tobago has $1 billion in foreign investment, it usually means that about 900 million of that will be in fact in the petroleum sector or the gas sector. Because we tend to be price takers in this sector, our growth and investment tend to be dependent on factors outside of our control and outside of Trinidad and Tobago. And growth opportunities tend to depend on things like the international price for oil, the existence of reserves, corporate plans, that type of thing. And for us, local possibilities tend to be in things like services related to growth in the sector. So you'll find people providing services to the petroleum sector, and there is some way to, in fact, get to that. In terms of the non-petroleum sector, the growth tends to be pretty much dependent on growth in the service sector, and it generally tends to be relatively underdeveloped in terms of non-tradables, and there tends to be some lack of autonomy in terms of growth, in terms of it tends to be highly dependent on what goes on in the petroleum sector. Okay, and because, again, the state has such a critical role, we tend to not have a traditional relationship between the state and the business sector, in the sense that for us, the state is what drives economic activity. It's not the private sector. And because that's been because of the extreme conservatism of the private sector, it's been because of the dependence of the private sector on the state, both for largesse, both for direct and indirect welfare gains, and as a result of private sector, which is generally private sector in the onshore economy, this is outside of the enclave, generally tends to be pretty dependent on the state for a lot of things, whether it be direct and indirect welfare gains, whether it be through the disbursement of oil revenue. So companies tend to be heavily dependent on the state. The state generally is the main engine of economic growth, and that has been so for years, and even with attempts at diversification, so continues to be so. Okay, but even though that is so, it doesn't mean that it will have to be so. The dependence on petroleum was the main catalyst for an attempt to reorient the economy, and we actually tried to use commodities as that catalyst. We did try a couple of things before. We tried industrialization by invitation, probably from the more 60s to the 70s. That was actually based on work done by Arthur Lewis, the Nobel Prize laureate, and it didn't work too well for Trinidad and Tobago. Other countries tried that and were much more successful. Singapore comes to mind, but we weren't that successful at it. Probably from about the 60s going into the 70s and to some extent into the 90s, what happened was that we also tried import substitution, which basically advocated that we replace foreign imports with domestic substitutes. And that was not also not successful because foreign goods were always seen as superior, and what generally tended to happen was that we got substandard local goods being sold at high prices and unhappy consumers. What we ended up tending to do, probably for both in the 90s, was something called resource-based industrialization, which pretty much meant that we just exported the stuff that we had a comparative advantage in. Now, export-led growth has some trade-offs. It does imply that you open your domestic market to foreign competition in a quid pro quo in exchange for market access to other countries. And While that means that we do get our goods get access to foreign countries, also means that we've got to let foreign goods get access to our country, and that means our local goods have to compete with foreign goods, which these are things like economies of scale as knowledge work. Right. So essentially, the dilemma that we faced was this. It was pretty much summarized very nicely by former Prime Minister Eric Williams at the Salt Swimming Ceremony for Scott in 1927. This is what he said. Blessed as we are with hydrocarbon resources, we had a choice to make. Now, the choice was based on the fact that there was enough gas available to either do LNG exports alone or do build up a petrochemical sector by itself but without LNG. And this is what he says. There have been attempts to persuade us that the simplest and easiest thing to do would be to sit back, export our oil, export our gas, do nothing else, and thus receive the revenues derived from such exports and, as it were, lead a life of luxury, at least for some limited period. This the government has completely rejected, for it amounts to putting the entire nation on the dole. Instead, this is the choice that they made. You have taken what may be the more difficult road, and that is accepting the challenge of entering the world of steel, aluminum, methanol, fertilizer, petrochemicals, in spite of our smallness and in spite of our existing level of technology. Now, essentially what that meant was that we took what was the harder road, tried to build a petrochemical industry from scratch, even though we didn't have infrastructure, we didn't have anything besides natural gas. So basically, what that strategy meant was that the result of that strategy was that we built Point pretty much from scratch. And was it successful? Well, it's been over 30 years, and as of now, Point is pretty much full up of companies, and we've had to build additional industrial estates in order to handle the overflow. So we've got estates in Union, for example, that is also thing, and I've got a couple others scattered throughout Trinidad and Tobago. Now, what we've been now seeing here is essentially the location of oil and gas fields in Trinidad. This is your traditional breakout, in the sense that this does not include the deep water acreage that is actually being put out for acreage, that is actually being put out for bid, that is actually being surveyed. This is just your traditional breakout. If you look to the bottom right hand corner of the map, you will see the areas in red. That's basically our gas reserves, or also gas reserves. Those gas reserves were discovered between the late 1960s and the late 2000s. And if you look at the bottom left-hand corner, the areas in green, those are basically our oil reserves. Those are much older, and most of those were discovered, I would say, between 1900 to, I would say, about 1950 1955, with some later deposits on the east side being discovered in the 2000s. The gas deposits to the north of Trinidad were discovered back in the early 1970s. Noting that there's a very nice discussion going on in the chats. Hopefully that will be recorded or also be captured in some way. It's also useful. In terms of our growth in gas utilization, what's pretty much been the case is that for us, we tend to have jumps in gas use when there's a new gas facility available. So usually if there's a new petrochemical plant coming on stream, if there's a new energy plant coming on stream, you would tend to get a slight jump in gas use in the year with a larger jump the year after, representing the case for the gas use. What's been happening is that at least up to 2010, when the AUM plants came on stream, that model held. What's been happening since 2010 is that we've had reduced gas production from the producers for various reasons, dealing with maintenance and pipeline things after the Gulf of Mexico incident. A lot of maintenance and checking over of gas installations to ensure that that couldn't happen here, leading to some fairly significant reduction in gas output. What's going to probably happen in 2014, 2015, we should be coming to the end of that, so we should beginning to see gas production heading back to 2010 levels. Right, in terms of gas production, again, traditionally our biggest gas producer has been BP, followed by BG, and to a lesser extent Enron and Petrotrin. And as of late, NGC should have other very small producers, their Total, their NGCs, and whatever, and probably from late 2013 to 2014, NGC actually becoming a gas producer again based on our purchase of Total assets. In terms of our reserve to production ratio, it's generally been falling. It's just about 12 years now. That's assuming that there's no production, no additional gas discoveries, no additional gas and gas production at current rates. And it's a fluid thing. If you find gas reserves, your reserve to production ratio is going to go up. If you produce at a greater rate or at a lesser rate, it's going to be adjustment. So it's not fixed. It's just a number at a fixed point in time. It's not an absolute number. It's not an absolute truth. And again, with increased gas use comes the fall off in gas reserves, which is to be expected. In terms of the impact on the economy, however, what's been happening is that energy per se has a pretty huge impact on the economy and everything except employment, because energy sector, unlike most of the other sectors, tends to be very heavily capital intensive. Use of a lot of machines, you don't necessarily need a lot of manpower to do it. And where you tend to find your employment activity in the energy sector is in transportation, is in storage, communications, business services, that type of thing. In terms of GDP, the energy sector has basically been having just over 40%, and depending on the year, that can run between 35% to 50%. In a bad year, it will probably be between somewhere like 35% of GDP. In a fairly good year, it would be up to 50%. In terms of revenue, you do tend to see a similar type of breakdown, where the good years tend to see revenue gain from the energy sector exceeding 60%, and in the bad years, it's just under 50%. In terms of exports, pretty much the same thing. In the good years, it will tend to be over 90%. In not so good years, no, it will tend to be somewhere around 80 to 82%. It's just, it is what it is. In terms of employment, pretty much stable at anywhere between 3% to 3.7%, depending on that number. Is not going to budge again because of the capital intensive nature of the sector. Right. So in terms of our plans as of 2014, as of this year, this is what is happening. We've got one NGL plant, that's the Phoenix Park, now an NGC subsidiary. We've got 4 LNG trains, NGC with minor shareholding in train 1 and train 4, 10 ammonia plants, 1 AUM plant, 7 methanol plants, 1 urea plant, 4 DRI modules to make iron and steel, 4 power generation plants producing electricity, 1 refinery down in Point of Care now, and one cement manufacturing plant. So essentially, ammonia, 10 separate ammonia plants, and in terms of export, we are the largest exporter of ammonia in the world. Not the largest producer by any means, but we are the largest exporter. Right? As we know, ammonia used for cleaning, used for agriculture, used for a lot of stuff, used for fertilizers, explosives, urea, amino acids, cleaner, antimicrobial agents for food products, refrigeration, used as fuel, used in textiles, used for woodworking, used as a stimulant, actually, sometimes. And in terms of our local fertilizer companies, we've got Yara out of Norway. We've got a couple of local companies. We've got Trinidad, which is actually still majority owned by the government. We've got PCS. We've got Point Lizard Nitrogen. We've got Caribbean Nitrogen, and we've got the MHTL AUM. In terms of our ammonia trade, again, we're the largest producer. We're closely followed by Russia and Ukraine. And depending on how the conflict goes, it will be interesting to see the 2014 number. Saudi Arabia, Indonesia, and the rest of the countries. What you should expect to see in the increase here is that you may see increases probably from the US or one of these other countries with low gas. In terms of our prices, what's been happening is that prices have generally been climbing upward from about their depth in 2009. As of 2014, we're seeing a climb down from a small peak experienced early this year. We're probably coming down near the peak of the commodity price cycle, at least in terms of ammonia. In terms of methanol, we've got switching commodities. In terms of methanol, we've got 5 plants. We're number 2 in export from a single site. And in terms of the stuff that we make from methanol, we do tend to make a lot of derivatives from methanol. Methanol is not something that you demand by itself. Most common derivatives are formaldehyde, acetic acid, MMA, MBTE, dimethyl ether, gasoline, biodiesel. What do you tend to make with things like this? Just fuel, gasoline additives, acetic acid, and it's generally used plastics, that sort of thing. In terms of the sectors that it's used in, pretty much all the sectors: construction, electronics, automotive, appliances, paints and coatings, insulation, pharmaceuticals, packaging, bottles, plastic bottles, solvents, that sort of thing. Okay, again, uses. Mostly as a feedstock. You make other chemicals with methanol. Fuel for vehicles. Safer automotive fuel that is less explosive. It's also a good carrier of energy, so you can use it as a store for energy. Solvent. Fuel cells again. Energy. Denaturing agents. It's used in wastewater management. Used as antifreeze. Paints. Pharmaceuticals again. Silicone. Fuel blending, car bumpers, that sort of thing. Methanol has a lot of uses. In terms of the companies, pretty much got 2 companies doing it. You've got Methanol Holdings, which is pretty much held by the government now after the Clico collapse of 2009, and you've got Methanex out of Canada, which has basically 2 countries. In terms of our methanol demand, we have numbers up to 2012. What's happening is that pretty much the biggest set of demand comes from China, and to a lesser extent in the Indian subcontinent. You've got some demand coming in from North America and Europe, but pretty much China. What happens in China influences methanol the most. In terms of uses, the traditional uses these days are taking up just over 41%. That's your formaldehyde, that's your acetic acid, your vinegar, that sort of thing. Your new uses tend to be taking up about 41% of your methanol use these days. Overall demand is something like 61.4 million metric tons over 2012. And again, in terms of what's happening with the chat, yes, fuel prices are heavily subsidized. Electricity is pretty much subsidized. Motor gasoline fuel is subsidized, although that's not really topic of the talk. And where is all the revenue going? A lot of it goes in social programs, health sector, construction, infrastructure, building, gates, etc. So that takes up a lot of money. And in terms of distribution, it's not as even as it should be, but it's better than a lot of places. And if you go to other Caribbean islands, you would, in a sense, realize how different life is across there as compared to Trinidad. Right. In terms of methanol prices, we've had a pretty significant drop off from January 2014 to now, and we generally expect prices to average just over 120 cents per gallon, which translates to just over $400 per metric ton. We expect that price to hold just throughout 2015. In terms of the light industrial and commercial sector, this is pretty much just the catch-all for everything that doesn't fall under the big uses, your ammonia, your methanol, your LNG. It includes light manufacturing, it includes chemicals, it includes natural gas and CNG, it includes construction, it includes food processing. It includes things like natural gas being used in kilns to work clay, it includes natural gas being used to bake bread, it includes natural gas being used in cooling, it includes natural gas being used in rum manufacture, bakeries, that sort of thing. If you can imagine a use for it, somebody's probably using it in Trinidad. Light manufacturing is anything that is not the big uses. Light manufacturing is like your bread making, your food manufacturing, that type of stuff. It's not heavy industry. It's not iron and steel. It's not, the big things. And yes, natural gas is huge. In terms of intermediate opportunities, this would be of more interest to people looking to go downstream of what we currently produce, which is basically methanol and ammonia. These are some of the downstream options that there are in terms of potential investments, and I'm not going to get into that so much. In terms of power generation, we started back in 1963. Tech is generally responsible for a lot of our distribution, and we segmented the power generation capacity in 1994, where we sold off some of that generation capacity to several a few other people. In terms of our independent power producers, we've got PowerGen, which is our biggest independent power producer. PowerGen, once part of Tech. We've got plant at Pina, we've got a plant at Point Resource, we've got the big plant in Australia for Spain, and we've got a plant at Hope Industrial Estate in Sydney that just recently went into operation. We've got Trinity Power and Point Resource, that's one plant, and we've got Trinidad Generation Limited at Union Estate in La Brea, that's also just one plant. Okay, and that's one. I'm just going to stop here for a little bit. In terms of weight question, in terms of local contractors providing services to these companies, local companies generally don't have to follow local content requirements. Foreign companies generally have one. There is actually a formal local content policy that was launched by the Ministry of Energy some years ago that foreign companies are supposed to adhere to. In terms of the construction stage, it's usually supposed to be about 20%. And in terms of our local companies, we don't have any requirements, but I know NGC tends to be quite a bit higher than 20%. And the local companies benefit, probably not as much as I think they should be, but again, because of the requirements of a lot of the companies, it's simply stuff that you can't produce in Trinidad within Trinidad and Tobago, so you have to import it. So, local content goes only so far. Right. So finally, we get to the crown jewel of the gas sector, which is LNG, which is basically by far the biggest gas user, biggest revenue earner, and pretty much has had a huge impact on our economy since 1999. In terms of GDP, we actually have seen slight increase in petroleum. LNG shows up in refining, so you've actually seen those increases in refining pretty much due to LNG. Have seen some improvements in financial insurance and real estate services. We've seen some increase in manufacturing. In terms of balance of payments, we've actually seen a huge jump in exports. And in terms of employment, you've probably not seen a huge jump. You've probably seen just a couple hundred people being hired directly as a result of energy. In terms of foreign exchange generation, significant gross earnings through export of energy and significant, again, conversions of foreign exchange by companies associated with Atlantic Day shareholders. Some of them do convert back foreign exchange into the local markets. In terms of public finance, you do see some increased tax revenue, you do see some taxation, you do see some royalties, you do see increased revenue from NGC, which is also tax. You do see some personal income taxation, you do see some income from VAT, you do see some tax on personal services. So, that is there. And in terms of Wade, Wade has a question. Local sponsor. It's probably implemented informally in the agreement, but in terms of the practical implementation, that one is in fact right now above my pay grade. That will be up to the minister. I do know that under some of the past ministers, it was a significant concern. I don't know what the case is now. And in fact, we simply can't fulfill some of those requirements. We do what we can. In terms of, again, Train 1, pretty much the owners are basically a mixture of gas producers, energy buyers, and NGC. So, again, BP is the biggest holder, followed by BG. Shell came in. Summer, I think, is a Chinese firm, and NGC took over Tractable Holdings, and NGC owns 10%. That capacity is 425 million cubic feet per day. BP supplies 100% of the gas. At the time, they were the only company that was able to supply gas, so that's why that is so. In terms of trains 2 and 3, 3 main plant owners, 2 gas suppliers, and again, some sales of LNG. In terms of train 4, 4 owners, gas supply coming from a lot of sources, significant liquefaction capacity. In terms of exports by country, well, as of 2012, Trinidad and Tobago was number 6. I suspect what's happened in the intervening years from 2012 to now, Australia would have increased their LNG production a bit because they've got some projects going. Indonesia may have also increased a bit. Trinidad and Tobago should be roughly either 6 or 7, somewhere in the vicinity. We would not have shifted positions much. And again, there seems to be a quite interesting discussion on local content going on there. Local content, in fact, should be implemented through the at the project stage and at the construction stage, where it is where, in fact, where you tend to find your biggest inputs. What usually happens is that it's not law in Trinidad and Tobago as it is in some other countries. What usually happens is that we implement it in the agreements with the companies. So the companies do tend to have local content requirements that they are supposed to fulfill. And like I said, depending on the administration, they tend to be more or less strict in terms of how they make the companies comply, but it does exist. Right. In terms of, going back to LNG now, in terms of LNG exports by region, what's happened is that essentially what's been happening is that as North American shale gas production has increased, our shipments in North America has proportionately declined. That's generally been taken up by an increase in exports to South and Central America, mostly Argentina, mostly Costa Rica. We've got some sales to the Middle East, we've got some sales to Asia Pacific. In terms of, again, LNG prices, outside of the US and possibly the UK and continental Europe, with the exception of Spain, most LNG prices tend to be above $9 per MMBTU. Again, the US, because of easy availability of shale gas, the prices tend to be a lot lower. So, essentially, could the spending be better? Could the spending be optimal? Probably. Have we benefited? I would say yes. I would say, in fact, yes, we have benefited. Hopefully, we'll benefit more in the future. In terms of the value chain and some thoughts on the future, essentially, the value chain basically is every part of the process from which you can generate an economic value. So, in terms of the upstream, where you have your exploration and your production of natural gas, you can generate, in fact, values through taxation and whatever. Taxation, production sharing agreements, that sort of thing. And you've got companies operating in the upstream, your TPs, your BGs, your Chevrons, your EOGs, NGCs. And in the midstream, you've got Phoenix Park extracting natural gas and selling the heavier fractions as LPGs, cooking gas. And you've got NGC extracting tariffs in terms of production and whatnot, transporting gas, marketing gas, distributing gas to the downstreamers, processing gas to some extent, PPGPL again. And in terms of their downstream, you've got pretty much 5 main uses of the gas. You can either use the gas as in power generation, you can use the gas in petrochemicals, you can use the gas in LIC/CNG, you can use the gas in metals and heavy industry, or we export the gas as LNG. Each activity carrying a value, each activity producing, leading to products being produced that have value, thereby deriving value throughout the chain. And again, the LNG process also has a value chain in terms of whether it be marketing fees or shipping costs or gas fees. Not going to go into that into great detail, because I think I'm running out of time. Again, this is the same thing. And I'm just going to leave you with some thoughts on the future. Best way to predict the future is, in fact, create it. Try to, in a sense, not put all our eggs in one basket. So, in terms of energy policy, do things like legislative reform, increase exploration and production, do deep water drilling, exploit heavy oil, exploit tar sands, increase the oil production to enhance oil recovery, heavy oil extraction, use of these operatorships and farmers to exploit marginal fields, rationalize things like your refining. In terms of gas, you would probably do things like an aggressive exploration program to increase your reserves. That would improve your reserve to production ratio. You would try to add value downstream by not just producing ammonia and methanol. You would try to produce products downstream of that would generate additional value. You would try to diversify into other areas. You would try to go outside of Trinidad. Do things like try to reform the existing model that you derive value from. In our case, if we want our reserves to go up, we have to drill for gas. And drilling is an expensive thing. We've got to attract investors to source the new gas, which is in fact in deep water. And we've also got to assure them that if in fact they do find gas, there's a market for it. In terms of increased the activity in oil and gas, you would sign the production sharing contract, but I think they've actually signed a few over the last month. We've got to do initiatives to promote drilling in deep water. We've got these initiatives going. We are reprocessing existing seismic data. We are creating new seismic data. We're doing new seismic surveys. We're doing new bid grounds. We're actually doing onshore exploration. We're doing things with Trinidad that have a huge amount of heavy oil that we know about. We're actually doing things like fiscal reform, reforming our team. And in terms of energy services, we've got local content policy frameworks. We've established that since 2004. Hopefully, we will have local content legislation that will help our services. We hopefully will help leverage things like exports. And hopefully, we can continue to do things like that. In terms of also interventions, we've got a few things that we're doing for that. We're trying to expand PNG. And we are also trying to do things in terms of power to support things like renewable energy and whatnot. We've got some things with some sustainability. We've got to ensure that the acreage is there. We've got to ensure that new projects are coming on at a regular thing so that we don't fall a victim to the cycle, or we can even out some of the troughs in the cycle. And we've got to, in fact, do things to ensure that local value added goes up so that the benefits redound to Trinidad and Trinidadians. In terms of bid rounds, we actually did bid rounds and we got some takers. We do have some EMP going on. We've got a cycle survey going on in deep water right now. There is more activity in the sector. We actually do have some development going on. There is, like I said, there are a bunch of heavy oil deposits that we don't do anything with. And those are available for exploitation. And in terms of the downstream, we can improve the criteria by which we allocate gas. Again, I'm just going to very quickly now because time is of the essence. Basically, in terms of downstream, we will try to add value to petrochemicals. We will target process. We will try to link it back to the local manufacturing sector. In terms of our global strategy, there's also opportunity outside. In terms of the Caribbean, we've got the pipeline to Barbados. We've got possibilities for small-scale LNG. We've got possibilities for CNG. There are opportunities in Tanzania, Mozambique, and Africa for those willing to take them. And finally, we've got to be honest about the sector. We've got to, in fact, do our analyses, look at our strengths, look at our weaknesses, look at our opportunities available to us outside, look at the potential threats that are available to us. Again, in terms of our strength, we pretty much got the point resource model, which a lot of people like, and a lot of countries wish to adopt, who are starting up their gas sectors want to adopt, because it's a proven and working model that can carry you to up to a point. In terms of the weaknesses, there is no cheap gas available. There is no cheap gas anymore. Gas prices have tended to be higher because the higher cost resources are now coming on stream. The tax structure is not as competitive as it probably can be. Our gas fields have been around for quite a while. Investment is critical in terms of opportunities. We are exporting expertise all the time, exporting services. We've got infrastructure development expertise that would make us competitive to build our projects outside there. And we've done great things with the merchant market model that we can also export to other countries. And in terms of threats, we've got new gas provinces that may be more attractive. We've got shale gas, and unfortunately, we don't move as fast as we should. And in terms of general development strategy, just a quick diversion, we've pretty much done two strategies between 2004 and now. We had Vision 2020 up to 2010, and now we've got the Innovation for Lasting Prosperity. Essentially, all you need to remember is that one, a lot of the people that worked on the Innovation for Lasting Prosperity also worked on the Vision 2020, and two, no matter what policy you have, any success is basically not going to be based on how good the policy looks on paper, but on how well it's executed. And time will tell if any of these things are executed well. One of our weaknesses as Trinidad and Tobago has been that we've been very good at putting down plans on paper. We have not been so good at executing these strategies in a great way. And it's something that we need to, sorry. And it's something that we need to think. Right. Again, finally, takeaways. We still heavily dependent, but we've actually managed to do quite a lot with the resources that we've had. We've made deliberate policy decisions to do that to maximize the return that we've got, and we've managed to create a lot of value, but won't get us where we need to be in the future, so we've got to do something to change that. And who's going to do that? Guys like you, guys like Wade in the chat room, who have been very vociferous and having a good discussion in terms of one day maybe we'll just achieve that sustainability. And thank you for your time. And just remember, if I can't answer you now, I do have an email address at NGC. It's richardj@ngc.co.tt. You can send me a query there, and I'll try to get back to you as soon as I can. No, just let me try to see if I can get some ready questions. What I will say is, Wade, what I will say is that GATE was supposed to be the way to make tertiary education available, and I do know that Wade actually, I do know that GATE made tertiary available for huge swathes of people, and some of the courses that UTT were in fact designed to train people in the sector to provide a base of experts for this sector. In terms of the vision for UTT, the vision for UTT came out of the fact that there was deficiency in the amount of skilled personnel available to the sector, and part of the rationale for the formation of UTT was in fact to address that. GATE and the easy availability of tertiary education basically meant that anybody who really wanted to get educated up to at least first degree level could have it. And I know thousands and thousands of people have pretty much taken up that opportunity. UTT again has a lot of very technical courses available. So yes, advanced scholarships would be nice, but in fact the foreign oil companies do provide quite a few scholarships and opportunities for those talented nationals to study abroad. NGC also does it, and Baker and a lot of these service companies that do operate here do always keep their eye out for local talent, and believe you me, if you are good enough, they will find you and they will train you. In terms of the availability of slides, the presentation will be made available on the group page for the NGC UTT courses. It will also be made available on the NGC website, I suspect sometime before the end of this week, and I suspect at some other time it will also show up on YouTube. So you can look at it at your leisure and thing. In terms of the slides itself, again, the slides don't really make that much sense without the audio. So, but they may be, it may be made available at some point in the future. So those of you who want the slides are generally available. If you actually did, and usually at the end, in terms of job opportunities, which I know a lot of people were asking about, NGC is in fact expanding. Keep your eye open. Usually have links to whatever jobs are made available either on the site, or you can check one of the Caribbean job sites that usually also has a listing of opportunities in terms of, and they also usually have information on internships and whatever. And usually at vacation we do take in some people, and every year, at least up to this year, we've had the vacation courses, which basically do sessions like this. It's a 3-day seminar that basically gives you a taste of the sector, where you can learn information on the sector. This is usually like the first of many presentations, and it's short, it's compact, and it's very detailed. In terms of progress in the plastic sector, not as much as you would like. I suspect that is not through want of effort on the part of Trinidad and Tobago, but I suspect that our timeline for doing that was actually somewhere around 2008, 2009, and with the downturn in the global economy, a lot of those projects got cancelled through lack of financing. So a lot of those potential projects. So that's why we haven't really seen that level of project work in Trinidad and Tobago since 2009. We've actually had a slowdown in the amount of downstream projects, but that happens. MIC and Rotoplastics do some small-scale production, but I don't think they import the raw materials from Trinidad and Tobago. I think all of that comes from outside. All of that downstream stuff comes from outside. And let me see. I think that should be about it for the live session. And thank you very much for your time. Thank you very much to the over 40 attendees that stuck around for the webinar. I hope that you've learned a bit from what I've said. Thank you for your time. Thank you for everything. And with that, I am out.